Well, welcome into this week's coffee chat here at Burns Estate Planning and Wealth Advisors. My name is Jordan Pedeaux, one of the advisors here, and I'm joined with my colleague and co-host for today, Ashley Terrell. Our topic today is just a mid-year market recap. We're going to talk about the biggest things that have happened in the market this past 6 months and maybe how we're advising clients and maybe what we're looking toward in the second half of the year. So let's just jump into that right away. Ashley, what would you say is maybe the biggest takeaways you've had for the first 6 months of the year, maybe the biggest storylines and maybe how that's affecting the market?
Well, the biggest thing is we've had a lot of volatility, and I think that we've learned the market is recovering a lot quicker than emotions. And there's a lot of things that have affected the volatility we've experienced, whether it is the geopolitical issues we've been facing or the fact that we haven't received that decrease in interest rates like we very so much expected and wanted this year. And in fact, the Feds increased their target inflation rate. So it's going a little bit against what we expected and wanted this year.
And I think the end of last year, everybody was expecting that rate decrease, and all of a sudden we're in this conflict with Iran. Oil prices are going through the roof. Inflation's going up. We have over 4% inflation contributing to that volatility, the interest rate. So that was a big part of.
Yeah, absolutely. And the price of oil and gas affects the price of everything across the board. In fact, inflation is actually hitting food one of the hardest. I think that vegetables facing a 11% increase year over year. So it really is an issue. A lot of people are worried, how do we keep up with inflation? This is affecting our expenses, and we need to come up with a plan on navigating that. So definitely a lot of unexpected has happened this year.
Yeah, and I'll add to that, not only that, we have a new Fed chair who has kind of gone back to maybe his mentor, Alan Greenspan, some of his, the way he responds. So he's not giving a lot of insight to the markets of what they're choosing or how they're choosing to move forward. So that also has a lot of people uneasy, and that's being priced into the market right now. We see bond yields higher, and so it's another just reason that's being added to the volatility of the market today.
Yep, absolutely. A little bit different from what we've experienced with Jerome Powell.
Yeah, and so this year we get into the conflict with Iran. In February, the market's down 10% right away. Kind of talking to what you were saying earlier, headlines, emotions, all of a sudden we see a 10% drop. But April, May, June, we're back over 20% gain from that point. So what do you see is just driving that? Is it strictly just emotions at first and then the fundamentals of these companies reporting earnings, taking over and really driving prices up?
So I think a lot of that is the economy is doing better than we expected. We haven't seen too many negative indicators out there, so that is one positive thing that we have going. And it's also earnings. Company earnings have been pretty decent. Although we are concerned with the investments in AI, it's very important to look at those company valuations. And fortunately, there's a lot of really good companies out there, and we invest in a lot of those companies. So making sure that you're diversified between those good companies.
Perfect segue, because I'm going to ask you about this. So we have seen that big increase, that big run up, 20%, a lot of in the tech industry. So what are you doing for your clients right now? Are you holding positions? Are you trimming and trying to find maybe more value plays where you can reinvest into those companies you were just talking about?
So the biggest thing is making sure that they are diversified across all different sectors of the market. As you know, AI, technology, it will have a big run up. It can go down just as quickly. And we are advisors for retirement, those who are retired. And typically we don't want them to feel that huge of a swing in the market. So making sure that you're taking profits when necessary, such as NVIDIA or Broadcom. Last month we were taking profits and taking that money and reallocating it elsewhere. There's tons of opportunity in the market, whether it's the industrial section or technology. Everyone is taking advantage of AI. So we do expect, hopefully, the last 6 months to look similar as the first. There may be some volatility, but like we mentioned, we've recovered quickly.
Yeah, and I'm going to just add to that the kind of the cliche financial advisor that every client is unique based on their goals, their wishes, their expectations. So what you do on one account is not necessarily what you do in the every account, but what you're saying is really kind of best practices across the board.
Exactly. And in fact, this is a really good time to sit down and see if those objectives have changed. So are you spending more money than you expected? Has your health changed? Has your risk tolerance changed? Over the last 6 months, have you felt comfortable with that fluctuation you've seen? So right now is a really good time to look at those things and decide if you need to make some changes and meet with your advisor.
Yeah, and so just a couple of those ideas like Roth conversions, right? Or maybe you're thinking about estate planning at this point, your legacy. So those are some of the things that you're mentioning that people come to when, you can follow up with them about.
Absolutely. One of the biggest things right now with the volatility are Roth conversions. For instance, if you own Palantir, we know that that's taken a hit here this year. So it's a really good opportunity to take that if you have it in an IRA, pay taxes on it now and convert it to a Roth. So those are some of the things that we're taking a peek at. And also RMDs. Don't wait until the last minute to take care of that. Make sure you plan it out. Are you doing any charitable contributions? Could we take advantage of that this year? So really sitting down and taking a peek at everything holistically. It's a really good time.
And there are a lot of value plays across the board right now. Just like you mentioned, Palantir, Meta, CRM, these are all down 20 and 30%. And so possibly moving some of that into a Roth and then seeing the rebound tax-free. So that's huge for a lot of clients. So lastly, just this, we hit the 6-month mark. There were half of the year's gone. What are maybe your expectations for the next 6 months, the rest of 2026?
Again, I do think that there is going to be some volatility. Things are changing with the market investments and really the way that information is disseminated down to people. So investors are hanging on to every word that the Fed says, every word that Trump says, everything that's happening geopolitically. Things change day by day. So again, I do expect the same volatility. I'm sure we all expect that same volatility, but keep an eye on earnings. As long as those company valuations are coming back good and you're invested in strong companies, you're going to be fine. And again, making sure that you're not subject to more risk than you feel comfortable with. So if you haven't been happy with those ups and downs so far this year, take a peek at that and maybe do some reallocating.
Yeah, and a lot of those short-term fluctuations are, like we talked about earlier, based on headlines. So every time Trump says we're close to a deal with Iran, the market goes up. Every time that falls apart, the market's back down. So I see that continuing. And then also we have the midterms coming up. So just more political headlines. That's going to create more volatility along the way. But I do think that once we get through that, the market gets a little bit more certainty of which direction we're going. We'll see investor confidence come back. Then we'll see the market run up. So that's what I'm thinking for the rest of the year, and kind of coincides with what you were saying.
Absolutely, and we've seen a good bit of that already. And it is, it's a hard balance to find, because I do want to mention that liquidating or selling during a down market is usually not the best route to go. So when I say making sure that you're diversified and need to do reallocations, do it in the best way possible. Don't go and sell everything while it's negative. You're going to recover much quickly if you wait it out. So just look at your portfolio and make sure that everything is still where it needs to be and aligned with your current situation.
Yeah, perfect. Well, I think that's a good summary of the mid-year market recap, maybe plus some expectations moving forward. So thanks for joining in. We'll see you next time.